On this episode, I'm teaching about equity using fairy tales. Once upon a time. This real estate stuff is not easy, so send me your questions and I will answer them. This is the Ask Jason Show. Hello everybody, my name is Jason Piercey and this is episode 69 of the Ask Jason Show. And today I like this topic because it's counterintuitive, which sort of sums me up, come to think of it. And I think it's an interesting one. Super freaking cold out today, so I'm thinking about being home and cozy and warm, and then I'm thinking about houses, and I don't know, I'm trying to create a transition. Of course I'm thinking about houses. This whole thing is about houses and buying them and selling them and other real estate things. Anyway, here is why in a down market, it's the perfect time to upgrade your home. Even though when you sell, you think you might lose on what your investment or whatever. Okay, so there's a lot of little intricacies about this. I'm gonna try, let me get some motivation. Can't believe I got my tongue with that. This was just full and I chugged it. That's not true. A lot of little details in this. I'm gonna try and line it up together so it's really easy to understand. For the purposes of this conversation, a down market is one where the average sale price is lower than it was in previous years. That's where we are right now. There's a whole bunch of reasons for that. It just means statistically, the average house that is bought right now costs less than the average house that was bought last year, the year before, 3 years ago. Doesn't mean your house is necessarily worth less. It just means on average, the houses that sell cost less right now. However, there are potentially some implications. So let's say we're looking at, for the sake of a conversation, 3%, just because. Let's say houses are 3% less now than they were 5 years ago. These aren't real stats. I'm creating a scenario so that you can understand why in a down market you should be selling your house and upgrading if your family needs a bigger home, or if you have a blended family and there's more kids and you need more bedrooms, or if you just got a great big raise and you can finally get the place with the double garage that you always wanted because you're going to buy that kit car with the whale tail because that's the Porsche you always wanted, even though you don't realize that the kit car is not the same thing, but you're going to do it anyway. That really went somewhere that it didn't need to go. Anyway, market is down 3%, we'll say. So in your $300,000 house, you're like, well, it used to be 300 and now it's like 391. Is that right? 369? Yeah, that's right. And now it's 391. You're like, well, if I sell now, I'm going to lose that $9,000. Let's think about this for a second. Maybe the house that you're upgrading to is also down 3%, but that house was $1 million 3 years ago, 4 years ago, 5 years ago, and it's down 3%. So think about that. Think about that. So now, if you're upgrading, you're not losing the $9,000 in equity. You're trading it for the purchase of $90,000 in equity, because all markets like this, there has never been a time in Canadian or American history where a crash was not followed by a boom. Always happens. It's the natural progression of things. It's a wavelength. It goes. It's just all of these things eventually come back. So I am currently not in the market for something. If I was and I had to sell my property, I would lose some money. Not a bunch, but I'm not actually losing it. It just means that I paid to live where I lived for the last 5 years. Does that sound so dramatic, really, when you word it that way? You're not losing money. You paid to live somewhere. Like, that's not free. Accommodations aren't free. Like, that's not how this works, right? So you invested into a place where you lived and now you want to sell it. In selling it, there's going to be a difference between what you have to pay off and how much you put down as your down payment, and you have this perceived idea that you're losing $9,000. You're not. Let's say you lived there for 5 years. $9,000 over 5 years? Do them. I'm gonna actually do the math. Joe, can you do the math, Joe? Actually, okay, Google, what's 9,000 divided by 60?
The answer is 150.
You paid $150 a month to live. Like, come on, that's a great deal. You could pay 3 times that amount. And so, well, that's only $450. Holy cow, you could pay 10 times that amount and it would still be a rental fee. You're in a good place here. So when we have these down markets, the ones that get hit the hardest are the ones that are the biggest purchase price. So something that was $1 million could now be like $850. I guess basically what I'm saying is the opportunity to take advantage of timing a down market when you are upgrading your home, that potential is worth the risk of your perceived $150 a month loss on your house over the past 5 years. So that $9,000 to move up into something and wait for things to rebound over the next 2, 3, 4, 5 years, you're gonna pick that money back up. This happens all the time. We're right here right now. Where do you want to be when we get back here? Which house do you want to be in? Here's the quotable bit that you take away. You gain more potential equity when you upgrade your home in a down market than that equity that you perceive to lose when you sell in a down market. End of story. And they lived happily ever after. Because that's how you end a story, right? Once upon a time, somebody was in a down market and they were worried about selling their home, but they just got a big promotion with ExxonMobil. So they upgraded their home and they exponentially increased the potential long-term equity increase and balanced it against the meager perceived loss when they sold their starter home. And they lived happily ever after. The end. Thank you for watching this episode of the Ask Jason Show. And I did it again, Jason. Yes, Jason. And we will see you next time. The Ask Jason Show exists so that you can get good real estate related information from a resource that you can trust. Now, speaking of resources you can trust, here's a couple I would trust to work with my mom. Because good enough for mom, I mean, good enough for you.